So in this lecture we're going to start off by looking at the first candlestick pattern, and this lecture will be slightly longer than the others because I'm also going to do a brief run through of the backtest procedure so you can see how it was done in my backtesting program. But first let's get into the first candlestick pattern. So the first candlestick we're going to look at is called the hanging man. Most sources say that this is a bearish candlestick that normally appears in an uptrend, and this indicates that a possible reversal could be on the cards. So the body of the hanging man must be small, but the colour can be neutral, so it can be either black or white. A key component of the hanging man is that it has a long lower shadow. Most sources say that a hanging man must have a candle length more than twice the size of the body, and that the lower shadow must be more than 2/3 of the total candle length. So it's this long shadow that indicates that sellers have started to come into the market. They haven't been able to gain control, but they are there and the uptrend may be slowing. So it suggests a possible reversal could be near. And when this pattern occurs in a downtrend, it's called a hammer. So you can see in this example, we've got a stock chart for J&J, Johnson & Johnson, and there's a hanging man candlestick that's formed near the top of the uptrend, represented here by the red arrow. The long lower shadow suggests that sellers have started to come into the market, and the momentum in the uptrend is slowing. And sure enough, not long after the hanging man formed, the market started to fall back and move into a new downtrend. Of course, just like what you find in other technical analysis books, this is a cherry-picked example that shows the hanging man working. And I could also easily show you a trade where the hanging man didn't work out so well, like this one in the FTSE 100. You can see a hanging man formed, giving us a signal to go short, but there was no pullback at all and the market just kept on moving higher. This is one of the major problems with any technical analysis book, but the aim of this course is to put the candlestick patterns into code so we can then see how profitable each pattern really is. So here you can see the exact code that I have used to define the hanging man pattern, and this is going to be loaded into my backtesting program, AmiBroker. The letters O, H, L and C stand for the open price, high, low and close price. The uptrend here is defined by the HHV function, and I'm defining an uptrend by the presence of a new 10-day high. So now we have the hanging man defined in code. I can load that up into my backtesting program and we can see how it performs on the data. So the first thing I'm going to do is load up my system template, which I've already set up. So all I need to do is change the candle type to hanging man, set the trade price and set the holding period to 1 day. Now we're going to make sure that this is a short only test. We want to sell short the market whenever we see a hanging man, and we're going to do this on daily time frames with no commissions. I'll select my watch list of markets and then we're going to run the test on the data. So basically this test is going to run through every market in our watch list, and whenever a hanging man occurs we're going to short the market and then we're going to cover it back after 1 full day. So our entry is actually going to be placed on the close of the candle and we're going to buy it back on the next close. So running this test on the data will only take a few seconds, and now you can see we have some results for 21 different markets with a 1 day holding period. You can see from this that the best market for the hanging man pattern was this ticker symbol here, which is natural gas, and this gave us an average profit of 0.71% per trade. So that was our result list from testing on our 21 different markets with a 1 day holding period. For the next test, I'm going to do the same thing, but this time we're going to change our watch list to the S&P 100 universe, so we're testing solely on US stocks. For the stocks test, we're going to avoid any stocks that are under $1, and we're going to ignore any stocks with volume less than 250,000 shares. This is simply to weed out any illiquid and unpredictable companies. So running our test on the watch list between 2000 and 2016 will take a little longer because there are more securities to sort through. So now you can see that over our universe of stocks, we produced an average profit of 0.15% per trade from shorting the hanging man candle pattern and then holding for 1 day. and this result came from over 2,000 trades. AME Broker also allows us to look further into the trade statistics and even have a peek at the backtest equity curve. But let's put the results into some tables now so we can more easily analyze these numbers. So first up, here you can see the full results from shorting a hanging man with a 1-day holding period and a 3-day holding period. The 1-day holding period results are here on the left and the 3-day holding period results are on the right. The top part shows the results on each of our 21 different markets individually, and I've chosen to show 3 things: the number of trades per market, the average profit or loss, and then the percentage of winners. Then in orange at the bottom, we've taken the average of those numbers. Underneath that, we've got our all trades benchmark result, which shows the average return from shorting each market on every bar and holding for 1 day. This allows us to compare the pattern to the average return. Then underneath that, we have the same results but for our 100 stocks, and I've chosen just to show the averages here instead of showing each individual ticker, as I think this gives us plenty to work from. You can see that with a 1-day holding period, the average profit from shorting a hanging man candlestick on our selection of 21 markets was only 0.04%. So that basically means that if you short a hanging man on the close, you can expect the market to fall around 0.04% on average, according to our historical data. This is slightly better than the average return from shorting the market every day, which was a loss of 0.01%, shown by the benchmark result. Below that, you can see that we also had a positive result on our stock universe containing S&P 100 stocks. Shorting stocks on a hanging man worked 53% of the time and produced an average profit of 0.15% per trade, as we saw earlier in the screencast. And this is based on over 2,300 trades, so this is a fairly frequent signal. Okay, so what do these first results tell us? Well, quite simply, you can see that shorting a hanging man on a daily chart and holding the trade for 1 day is not a particularly strong signal. It only produced a small average profit per trade, which was slightly larger in stocks. And once you incorporate trading commissions into these results, you will most likely be losing money. Looking at the 3-day holding period now, you can see that shorting the hanging man does slightly better with a longer time frame. Across our 21 markets, we saw an average profit of 0.21% per trade with a win rate of 55%, and in stocks we saw an average profit of 0.22% per trade with a win rate of 50%. These numbers are much better than the benchmark returns. Looking at the 5-day holding period, you can see that shorting the hanging man scored an average profit of 0.24% in futures and forex and 0.25% in stocks, again beating the benchmark return. Finally, looking at the 10-day holding period, you can see that the average profit and win rate has dropped for both of our tests. Overall, what do these results tell us? Well, it's quite clear that the hanging man candle is not a wildly profitable pattern, though it did okay with a 3-day and a 5-day holding period, and it outperformed the benchmark return on every test. Once trading costs are introduced, a lot of these profits would be wiped out. But even so, because we have seen this candle beat the benchmark consistently, this still might be a useful short pattern to keep an eye on. Next up, we'll look at the hanging man's opposite, the hammer.